Hi everyone. In today's video, we'll be looking at the Accounting November 2023 paper, specifically question 2, which deals with cash flow statement and financial indicators, which has been allocated 35 marks in 25 minutes. So getting straight into the question, it says the information relates to Showbiz Limited for the financial year ended 28 February 2023. Okay, so we are required to do the ordinary share capital note. That's for question 2.1. We're required to do the ordinary share capital note. Then 2.2, complete the following sections of the cash flow statement. And then immediately you know that now we get into the cash flow, operating activities, financing activities. In 2.3, we are going to look at some financial indicators, which is your net asset value per share, dividend payout rate, and lastly, the percentage return on average shareholders' equity. Right, so let's look at our information. Information A, quickly reading throughout, we know that we have our share capital and dividends. On the 1st of March 2022, we had 1,200,000 shares in issue. And then 30 June 2022, an additional 300,000 shares were issued. And then 1 December 2022, 90,000 shares were repurchased from a retired shareholder. He was paid 80 cents above the average share price and would no longer qualify for dividends. So that's some key information there to consider when we are doing our ordinary share capital note. Okay, so let's just scroll onto the answer book here. So we have quite some events. And the first one that we have here is information A. Okay, so they said 1 March 2022, we had 1,200,000 shares in issue. Okay, so that's already been recorded for us, 1,200,000 shares in issue. And then we know that we had a repurchase. This is what I like to do before I just continue with anything else, before filling in any amounts. You know here that you have a share issue. This has been extracted from information A we just read. So let's see the date. We issued the shares on the 30th of June and bought back on the 1st of December 2022. So this is 30, excuse me, so it's on 30 June 2022 and then on 1 December 2022. Right, so the share issue, it says an additional of 300,000 shares were issued, so we feel it's 300,000, and then a repurchase, of course it's a minus there. So now when we look here, they said 90,000 shares were repurchased, so this is quite an easy activity because they've given us all the amounts. You don't need to really calculate for anything. So here, if you calculate 1,200,000 plus 300,000, that's 1,500, 1,500,000, and then you subtract 90,000, then that's going to give you 1,410,000. All right, so we could just say this is either the balance at end of financial year, or you could say okay, let's just make sure this is accurate. You could say shares in issue on, so if our year began on, okay, that's 28 Feb 2023. Okay, let's just confirm our year end. Yes, this is 2023, correct. So now it's all onto the amounts. We are just supposed to calculate our amount here. So the share issue on the 30th of June, they said an additional 300,000 shares were issued, but were not given an amount, right? And then here they said 90,000 shares were repurchased from a retired shareholder. He was paid 80 cents above the average share price. Okay, cool. Now we move to information B just to check if we have any amounts that we can use to fill in our ordinary share capital note. Okay, then now we have ordinary share capital here, right? So ordinary share capital, we had an opening balance of 7,200,000, and then we had a closing balance of 9,306,000. So we can take this closing balance and immediately fill it in here. It's 9,306,000, right? And then we can use that balance to work our way upwards and also find one of these figures. Maybe one of these two figures could be a balancing figure. All right, so now we're looking at our shares repurchased and our share issue, which are the two missing amounts. All right, so here they said we had ordinary shareholders equity of 10,200,000 closing balance, and then we had an opening balance of 7,985,500. Okay, and then now how can we use this to find the repurchased and our shares issued? Okay, so like I said, one of these two figures could be a balancing figure, so we just need to work on one figure, but we have most information on our repurchased shares. They said it's 90,000 and it was at 80 cents above our average share price. Okay, so our average share price here is the same as saying 9,306,000. So this is our average share price. It's 9,306,000 divided by 1,410,000 shares. Okay, so this is shares, number of shares, and then okay, let me just include the rand amount there. So this is the value of shares at the end. Okay, so our balance there. So now our average share price is 6 rand 60, right? So if you just quickly calculate, because I've already done the calculation, it's 6 rand 60. So from there you get okay, so let's say at 6 rand 60. Let's just squeeze this in here. All right, so if you say 90,000 multiplied by 6 rand 60, let me just quickly calculate that. So it's 6 rand 60 multiplied by 90, so that gives me 594. Okay, so that's 5,594. These numbers are confusing me today. So you'll just work your way up and then you can find the balancing figure, and then now you'll say 9,306,000 less 7,200,000 plus 594, because you're doing everything in reverse, and then that would give you a balancing figure of 2,700,000. Okay, so remember that I got the average share price at the end. I just wanted to see how much was one share after we have done the repurchase of shares, because remember that we do a repurchase of shares at average share price. We record it on average share price only on the ordinary share capital note, and then on the retained earnings, you know that we only record the extra amount that we have paid over and above our average share price. All right, then now we'll move to 2.2, which talks about the cash flow of operating activities. Information about cash flows, we are supposed to look at banks, payment of dividends, tax, shareholders, and all of that. So the first thing that we can use here, or what we can see, is that we don't have to do cash generated from operations. So we have interest paid already. Fill in or just populate your table. So we have taxation paid, and then we can have dividends paid here. Dividends paid, right? Then we just need to look at some information, because these are cash flows of operating activities, right? So the first one we're going to deal with is taxation. If you haven't watched my previous videos on how I deal with taxation when we're working on cash flows, I highly recommend that you go watch those videos when you have time. Okay, so we're going to do taxation paid. So with tax, we have SARS income tax, right? So with SARS income tax, here we are looking at net profit and income tax. Of course, we have to consider these balances, and then we also have to consider this year's income tax, right? So we are going to approach this way. We are going to approach tax in this way. We're going to start at looking our opening balance. Our opening balance, we have 42,500, and it's on the debit side. So if it's on the debit side, that means SARS owed us. Remember that a liability increases on the credit side. So if we close a liability on the credit side, that means we have overpaid SARS. Last year we overpaid SARS 42,500. So this is our opening balance. So our opening balance of 42,500, right? We are not paying SARS anything this year because we SARS was owing us, so we cannot pay SARS any further. So it's not going to be a cash outflow. Right, so I'm just gonna do this. Let's say taxation paid. Okay, so it's going to be an outflow because we have to pay something at the end of the day, right? So the first one, our opening balance is on debit side. We're not paying SARS anything, and then we move to the income tax for this year. That one is going to be always an outflow. It's going to be an outflow always because that's what we are supposed to pay, but we haven't necessarily paid that exact amount. We still need to calculate that amount. Okay, so we're given net profit after tax as an amount of 912,500, right? So we are given the net profit after tax as 912,500, right? So we know that the net profit after tax is equal to net profit before tax minus tax, right? So what we're going to do here, we're given that tax. If this confuses you, just know that net profit before tax is 100, and then tax is given at 27%. So this will be your 73%, right? Then now we move to what we know, what we want over what we know. Also, if you haven't watched my previous videos, I recommend that you go watch them so you can know why we are doing this in such a way. Right, so we have what we want is income tax, what we want over what we know multiplied by the amount. So it's 912,500. Okay, so let's just quickly calculate that and see what we get. So it's 27 over 73 multiplied by 912,500, and that gives a tax of 337,500. So that's 337,500. So where's my working here? So it's 337,500. Remember that when you're answering in your test or exam, make sure that your workings are in form and not so random like mine, because I literally just write everywhere or anywhere on the paper. So just make sure that your workings are formal and you reference your working. Let's say maybe this is working one, you just say working one, and then you go there when you calculated the text, and then you just say either next to the amount or here you'll just say working one, or you could just show your working here, which is pretty fast and easy. Okay, so let me just do this. Okay, I'll just write the amounts there, and then now we have our closing balance. Closing balance is 27,800 on the credit side. That means we still owe SARS. We have not paid SARS. So it's going to remain as 27,800. It's not an outflow because we have not paid SARS, right? Then now we'll just calculate how much we have paid in the form of tax. So we have an outflow of 267,200. So you can just copy or take these amounts and write them down here as you're working. So the final answer is 267 200. So it is 42 500 minus 337 500 plus 27. What's this? 27 800. 27 800. Right. Then now we move on to dividends paid. With dividends paid, we have information E. Information E talks about dividends and earnings per share. Final dividends per share on 28 February 2022 was 24 cents. Remember the information that they give us here, that the 90,000 shares do not qualify for dividends. Okay, so it's 24 cents per share, and then interim dividends per share paid, these have been paid, okay, on 31st August 2022, was 30 cents per share, of course, and then final dividends per share on 28 February 2023, it's a question mark, and then we could either be required to calculate that, or just see when we're doing the workings. And then earnings per share on 28 February 2023 66.2 cents. And then note, all shareholders in the share register at the end at the financial year end qualify for dividends. But this guy doesn't qualify because already he's not in the share register at the end of the year. Right. So what we're supposed to do in this case, let me just erase this because it's a bit untidy. So what we're supposed to do in this case, we will just get our interim dividends. Of course, you know that what we pay is interim dividends and dividends that we have declared in the previous financial year. So it's interim for this year plus shares. So I'm okay, not shares, I mean dividends, plus final dividend from last year. So this is such an easy and quick calculation if you just understand the notion behind the calculation of dividends paid. We have paid interim dividends this year, and we have also paid what we declared last year. Remember, in the previous financial year, we said to them, "Oh, we issuing it out shares, not shares, dividends. We declaring dividends, but we will pay them next year." So we are paying them now. We are in the next year that they were talking about. So we are paying them what we declared last year, and we're also paying interim dividends. So it's going to be an addition of the two, and then from there you will just have your interim dividends per share on 31st of August 2022. So let's see when we did the buyback and when did we do our repurchase. So the repurchase, he qualifies for interim. So at interim we had 1,500,000 shares, because it's an addition of 1,200,000 and 300,000, because August comes after May, after March and June. So when we're issuing our interim dividends this year, we issued out the dividends, we declared the dividends for 1,500,000 shares. So it is going to be 1,500,000 shares multiplied by, let's see how much they were, 30 cents per share. So it's 0.3. So it's 1,500,000 times 0.3, which is 450,000. And then the final dividends that we declared last year is 24 cents. So the 24 cents, but it only applies to 1,200,000 shares, because we remember that we only issued out the 300,000 shares this year. So we declared on 1,200,000. So 0.2 times 1,200,000. So that's 240. Oh, I just realized that I made a mistake here, so it's supposed to be 0.24. All right, let me just quickly redo my calculation. 24 times 1 million. Okay, so that gives us 288. Then if we add these two amounts, they will give 738,000. So that's our dividends paid. Remember, it's an outflow. Then an outflow, we have brackets there. Okay, so that's it with our dividends paid. And then now we're going to do cash flow of financing activities. So with financing activities, it's loans, it's shares issued. So those are the things that companies use to finance their assets. Okay, so with loans and issues of shares, of course, we have a loan. First things, so the annual loan statement for 2023 reflects the following: the balance on 28 February 2023. This current year, we are closing with 1,678,600. And then interest capitalized for the financial year is 117,600. Then we're making monthly payments including interest 22,750. Okay, so we have information on the loan, but I suggest we start with the shares because they're already issued, so we can just calculate this. So we have shares proceeds from issued shares. All right, so proceeds from issued shares, we had 2,700,000 there. So that's 2,700,000. That's an inflow. And then we used some funds to repurchase the shares, remember? So funds used to repurchase shares. It's going to be our 594 plus the 0.8 multiplied by 90,000. Don't forget that, because we just want everything that we have used to buy back those shares. Plus 0.8 times 90k, that is 666, and it's an outflow because we've used money there. Then now coming to the last one, we will have our change on our loan. Okay, so we just want to see what happened to our loan, but most definitely we have paid the loan. We have not taken out any loan, so it can't be an inflow. So we just note that it will be an outflow, and then we'll just get on with our calculations there. Now the change on loan, they said we had a closing balance of 1,678,600, and then we had monthly payments including interest of 22,750. Right, so let's just calculate how much our monthly payments amount to for the year. So it's going to be 22,750 times 12, 750 times 12, which is 273,000. Okay, so interest capitalized is 117,600. Right, so our change in loan on the initial principal loan amount, we first settle interest before we can settle the principal amount. I cannot stress this enough. So what I'm saying to you guys is we find the difference between what we have paid less interest, because we're supposed to settle interest first before we can settle the principal amount. So what we have paid in total is 273 minus the interest. So the interest, they said it's one. So let's just avoid more mistakes. It's 117,600. So it's 117,600. Right. So our principal amount, our loan, it decreased by 117,600. So it decreased by, okay, I made a mistake there. It's 155,400. Okay. 155,400. So this is our outflow in the change in loan, right? So remember that we do not account for interest here. We could either account for interest in this in a different method, but I just won't get into it. But like, this is what you know. So we will cover for interest on our cash flow of operating activities. So this is where the interest is covered, and hence you need to account for this financing activity, which is only the loan, because interest is just the cost to financing. Then now we'll just be moving to the last section, the last required of our question. So calculate the following financial indicators. So for this one, I highly recommend that you watch my video where I was explaining financial indicators, but I'll also attach the link in the description of this video. So the first one to calculate is net asset value per share. So the net asset value per share, we know that already we have our number of shares at the end of the year, which is 1,410,000. So that's 1,410,000, right? And then now what we have to work on is our net asset value per share, or net asset value per se. So our net asset value, we know that it is our ordinary shareholders equity at the end of the year, because net assets, they only just mean assets minus liabilities, which is equity. So net assets, they just mean equity. Right. So it's 10,200,000. Okay. So 10,200,000. Let's see what percent that gives us, or how many cents. So 1 for 10. So if you calculate it in rands, it would give you 7.23. And then if you're using cents, you'll just multiply by 100. And then it will give you 7.23 cents. Either way, you'll get both marks. And then dividend payout rate. Dividend payout rate, we are looking at how much of a percentage, or how much of the earnings is the business paying out as dividends. Okay, so here we are going to look at either earnings per share, yes, and then we look at what they have paid out or declared to shareholders. Okay, so the first thing that we're going to look at is our denominator. We have earnings per share 66.2. How much of our earnings have we paid out? Okay, so our earnings per share of 66.2%, or 66.2 cents. And then now we're supposed to find what they paid. Our first hint there could be our interim dividends. Our interim dividends, they paid 30 cents per share, right? So we're going to add 30, but now we're supposed to find our final dividends per share, right? So our final dividends per share, we have shareholders for dividends here as a closing balance 282, right? So the final dividends per share, we could just say 282 divided by 1,410, because there were 1,410,000 shares at the end. So it's 282 divide by 1,410,000, and that gives 0.2 cents. So that's 20 cents per share. And then you just add it to this. So this is in cents. So there's 30 cents, 20 cents, 66.2 cents. So that's 30 plus 20 over 66.2. So that is, okay, multiplied by 100, because this is a percentage, it's a rate. So that would be 75.53%. Okay, so that's 75.53%. So the company pays 75.53% as dividends from their earnings. And last one, return percentage on, or percentage return on average shareholders equity rather. Now this one has got 4 marks. Okay, so what we need to do here is just, also we can start here, and we know that average, on average shareholders equity, there's going to be half somewhere. Opening balance, closing balance, the closing balance is 10,200,000 plus the opening balance on your shareholders equity of 7,985,500. So it is 7,985,500. And then on top we have percentage return on average shareholders equity. Now you know that you average, what's this, your percentage return, or your return, is your net profit after tax, right? So your net profit after tax, we're given here 9 million, not 9 million, 912,500. So it's 912,500. So this is net profit after tax. This is the opening balance. This is the closing balance of shareholders equity. Right, so let's just quickly do our calculation. And we have half of 10, 200 plus 7,985, 500 multiplied by 100, of course, because it's a rate. And then you will get 10.04 or 03%, and that's 10.04%. All right, and then that brings us to the conclusion of our video today. Thank you so much for watching, for tuning in. Make sure that you subscribe, hit the like button, and share with other friends or family who are also interested in acing accounting. I will definitely see you in the next video. Cheers.